Okay, so I want to just go through this indicator, the 20 pip grid. And I'm sure if you go out there on the internet, you can find a grid indicator, but this one is just set at 20. And I have, the rest of this is all from MetaTrader. It's a really fat 1 period moving average on highs, 1 period moving average on lows, and we have a 1 period moving average slate gray on closing price. And we have the bars, and I have that set to, let's do the, I have it set to the chart is on the background. So I'm going to emphasize the close. I can go to a pure closing line. So I have 3 switches here. So there's 3 modalities, and I think each has its own use for entry. The line chart is the ultimate in, okay, like structure. If I just go pure line chart, then your brain is more drawn to just, okay, look at this big move. Look at that move. It takes all the noise out. The wicks are the noise. High and low is the noise. But we have the high and low plotted there, so we can see the zone that we're looking back into. This looks like it's about to chop higher. Now, this is controversial. I realize people don't like to plan too far ahead, but I don't think I would have a problem at all selling every 20 pips for the next 200 pips up into this. I could zoom out to the, so if I explode this chart, exactly at what point would I say, well, I'll go to the monthly. Okay, well, we're already in this trap zone here. So you got to figure that sellers going back. So this is the big deal, is the fact not that we took this out, because there was a sell in that. I'm sure that, this is 20 pip grid, that if you were to sell into this window, that before they went higher here, that you could have made some money. I'll zoom in one level. Go to the, that's the monthly. I'll go to the weekly. So here you would have reaped more than your, I know it seems inconceivable that you could sell every 20 pips into that and actually have a good ratio, the outcome of that. And so how do you know that selling new highs is a good idea? If you have diversification of risk, and that's the key. You cannot sell. I don't want anybody to think that you can just raw trade any one strategy and only one strategy and make money. You would have to have multiple to really milk every move in the market. You'd have to have at least 3 trade plans that are going against each other. Right? So that's I think the problem people have is they don't want to think about making money from a trade that is not their trade. So people get into, well, that's okay, maybe it's not, but it will be, right? You'll be playing country music someday, and you'll wonder why you never played it, why you didn't play it in the first place. I guess maybe you weren't an alcoholic, right? I don't know. Seems to me like a lot of the country music's like really kind of slow and sad. Maybe it's just me. And like, so this high here, these show up only when you go to the weekly. They don't show up so much on the, and that's a big deal. So if you look at just watching Samurai Trader do a video, and so he talks about this. But the thing is that you've got to think about what would the trade be in these zones. And on the weekly, this is a perfect world on the weekly. I mean, it's really low noise, so to speak, especially once I took out those evil wicks and bars. So here, all you know is you closed here. So if you actually were to pull the trigger on time structures, they will look like, the trades would look like this, where you just assume, okay, you make an assumption after this closes up that this is a fucking valley, okay, and this is a peak. Once it closes here, that is now a peak. That's a valley. You've got a buy limit here. But to say that you put a buy limit here and you put a stop here and you got stopped out and you missed out on this move, okay, no shit. You're going to have, this is the weekly chart, mind you. If you were buying this plunge, which I'm kind of doing on the Australian dollar right now, I'm buying this plunge, and people are going, I can't fucking believe you're not short. Okay, great. Even the urban Forex guy would tell you, you need to buy that. Also, this is the ceiling rooftop on the weekly is also combined with the hammer doji. This is the lowest range before the explosion. So perfect double top in price. You're putting sell limits here. Okay, every 20 pips. If you're going to trade the weekly charts, every 20 pips you're buying this. Now, people are going to say to you, as you're getting filled on this, and it never fills this ticket. I think it just clips it. They go, I can't fucking believe you're buying. Dude, why aren't you short? I guarantee you, any motherfucker that's going to be like retail goober mindset, the question is, did you have trailing sell stops here? And this, once it crushes this 20 pip grid, look at this thing pile on. Once it takes this thing out, just hard. This is a big deal pivot that goes back here. So from the auction theory, this is the unfair value at the tippy top. The traps come on high volatility. High volatility trap, because you don't get trapped on it. You do get trapped on a drift, but it's not that risky pip-wise. This above, okay, so on this high, where everybody knows that exists, and this is the beginning of the year trap. High volatility, a different kind of system or algo or human, whatever, is trading these low volatility things. So here's low volatility, and then insane. And of course, if you are putting sell limits in here, up into this, which is pretty, you could go to the 4 hour and probably see some of these were winners. But you're stepping in front of the largest, like if you step in front of this huge hole, you even if you start your limits here, you can tell me, oh, well, eventually I was a winner, but you've got to space them appropriately for what could come, and especially you may only buy 20% of this position, and now you're going to start martingaling in here. You're going to buy 50, 60, 80. You're going to add to the account. You buy so fucking hard. Besides, the whole time this is going down, there's pressure building up on top now. So once these two pressures have, see the engulf is here. If you believe in the engulf, right? I mean, if you're an engulf trader, you want to trade the engulf process. If here, this point is taken out and there's never a higher high, and the compression is literally from here to that point. I mean, this is how deeply punished. Plus, you are now below this double floor here, and there's a vacuum. This is severe vacuum now, and it only goes back. This one doesn't matter now. You may say, okay, well, time-wise structures is double top becomes a double bottom becomes this. In other words, there's always this kind of hemming and hawing at this node, right? So this is the hemming and hawing nodes that Fibonacci is supposed to be able to identify. But this catastrophic, this giant vacuum, plus once we go underwater here for the bulls, like Alexander Elder says, and this Mad Forex guy understands what I'm talking about, I suppose, if you watch her. Alexander Elder, which I study with quite extensively, I like his metaphors about they're holding the bull's head underwater. So as soon as you go below this thing here, the compression is immense. And yeah, do you think this is going to keep tanking, especially at that rate of change? So even the Urban Forex guy gets it that, okay, you are selling into that. Well, I mean, here you're just getting filled at a way better price. In other words, these are pendings that you would sell anyways. And you might eagerly sell for pullbacks on the 4-hour. This is the weekly. So on the 4-hour, there's probably some beautiful pullbacks. If you go to the daily from the weekly, okay, you have a whole different. Some guys, you're in a winning trade while some guys scalping around you, you're both making money. In other words, in a perfect world, everybody's making money if they're on the appropriate time frame and the appropriate size for what the market, what the whole herd is doing. There are times when, this is why people would say, well, I was doing so well, and then, so this guy that used to hound me, I don't know if I ever blocked him, I think he just gave up. And so he said, well, you know, this, that, and the other thing. Well, but he says, oh, yeah, you think that's easy? He goes, the last 2 years have been really hard to trade. Yeah, if you're a trend trader, of course, because 80% of the market's chop. Like 80% of the market's doing this bullshit. You could say it's going up, but these are some great fucking counter trend moves. And you can talk all day about that. And if you trade each price pulse, it doesn't matter in the end. Like I could show you charts where you just say, oh yeah, of course, if you would have held through that, of course. Well, you have to be prepared to hold through that. And if you're trying to make 600 pips and 300 pips, then yeah, 150 pips stops, 75 pips stops, 40 pips stops. I mean, your tightest stop's going to be 30 pips. Because you can scalp, you can make 80 pips with a 30 pips stop without even being there. You know, you place the pending and be like, yeah, they're probably going to go fucking after this asshole stop. Now, you could say this asshole stop. We don't know who it is. And it doesn't, that's so weird about trading is that it seems like people are saying, well, this is the retail guy. This is, I'm trading like a professional. It doesn't matter. The retail guy can make tons of money. In other words, the guy that's entering on totally with the crowd, and you'd say, well, the crowd's wrong. Yeah, but for how long are they wrong? And if that move just keeps moving, and the time frame that you're on, big move down, sideways flag, okay, it could retrace, but it could keep tanking. And that was weird. I was watching that Urban Forex guy, and he was saying, well, it's going to go down. It's going to, not always. Like it can go up and look like it's topping, and then just keep going up. And the thing that's, for me, what's sucking the market up and down, like they said, gravity, supposedly, the first version of gravity was that it's sucking you down or something. Now they say it's pushing you down. Well, you're still being, I don't know. There's still pressure. And, you know, so now what? On the Euro Australia, are you buying here at the breakout? Well, it depends. Are you trying to make 20 pips or 120 pips? And that's a whole other thing there, too. And then so some guy emailed me and said he was afraid to trade real money. Well, just trade, like I said, you have to find out this threshold for pain. Is it going to be $20 per idea? How much would you spend if you're painting paintings? How much do you spend on ink and if you're doing just ink and paper to how much do you have to sell those for to cover your cost of your materials? And even if you trade demo, you're still using your carbon footprint up, and you're still using time and energy and all that. So you'd have to actually figure out what's the threshold for pain for it to feel like a demo. But if you're blowing up the demo, then that's you're making money right there, because you're just getting used to. Well, the market is not. It's 24 hours, but it's not always tradable. From a like you could be an investor and look at your stuff and say, well, I want to get out of that. In other words, you could execute, but if the spread is so wide, you'd almost have to wait for the spreads to tighten up a little bit. Like if you ever freaked out in a position, they say it's better to wait a little bit because the price might get better. Well, of course, if it's always constantly fluctuating. But if your psychological threshold for pain is I just got to get the fuck out and I'll rethink about it. I don't care if I have to come back in and repay the spread and commissions. At least I feel I'm comfortable. So now, this also comes down to the more you studied, the more you would be an investor, because you say, oh no, I wouldn't make a decision that's just half-assed for a little bit of time. I'm a calculated person. I'm not a fucking idiot that's just impulsively trading and making money, which you could be if you understood the price pulses of the market and you just go, yeah, that's fucking ridiculous. Let's get out. That's not gonna last, that price. It's just moved too far in my favor, because it's in your favor, and then you're like thinking, well, look, I'm making money, therefore you're answering the question that I know what I'm doing. Well, you could be making money just by being in the market. As Mark Douglas would say, you can be in the market and make money without knowing how it's happening. Because you could actually buy and sell all day long randomly if you just said, well, if I'm up a little bit, I'm getting the fuck out. I don't even know if I'm right about this trade. That's a very difficult experiment to do, because most people would say, well, I have to have a reason to buy and sell. I'm just not going to sell because, like, whatever. The whole point of stepping into the market is supposed to be some type of amazing calculation of your moving average and your time of day, and this candle closed below this, there's my trigger, put a stop at even a worser price below you to sell, and it turns out being a winner, and you're like, okay, well, if it's not broke, don't fix it. I got a way to trade, and I get that, right? So people are like, why criticize these people there? Okay, dude, I don't think anybody that even fucking posted that shit looks at what I did on their video and goes, holy shit. Only one time did I have a guy say that, and he says, one of my students came across, he was just appalled. And I'm like, oh my God, this is the guy that's selling the fucking Pam, well, not Pam, it was called, I want to say it was called Gay, but no, it's called, it was just, it's just some silly thing, and it was a Akanashi system thing. And I thought, okay, but this, to train yourself to the real world, in other words, it's better to have conceptual view of the market as it's truly an auction, as opposed to the, well, I got this special indicator that has to be, wait till I set that up. Like, I can't play a song on my guitar till I set up my effect board. Okay, well, if you can't play acoustic guitar, that's the thing. Like, can you play an acoustic guitar? That'd be naked trading. If you need to have like a whole rack, like a Zappa rack of effects and harmonizers, okay, well then it's not to say that you can't be famous with a rack of gear, and you can't be a master trader with 40 indicators on your screen, as long as when you pull the trigger or you place the pending, you're like, okay, that stuff's here just for fucking, for Vegas mode, as my buddy would say, to make it look like, oh, look at how fucking, I did that when I was a kid. One of my friends called me out on it. So I had all these books in my room. I was like fucking 6 years old, so I thought, oh, these books, they smell so good, and I put them in my room. I couldn't read, and my buddy goes, you read those? And I go, yeah, of course. He goes, no, you didn't. I go, So I was like, no, 6 years old. And I'm like, so, you know, it's tough to come at the market with the same kind of way you would do surgery on actually, I'm sure if somebody came into the operatory and you were a surgeon, and you look at their vital signs and they're highly volatile, and you have to work on them, I'm sure there is some type of like, whoa, this guy, this is going to be a losing trade. And that's another time window thing there. That's what Albert Brooks came from, the world of, he's like, dude, I'm doing surgery. I just made fucking more money. And surgery is a tedious, see, another thing I got to consider, Albert Brooks is using, just like Bill Williams is using, anybody studied Bill Williams, but he's a pilot, and he talks about the market drifting, and a lot of his metaphors come from aviation. So inside of Albert Brooks he's a surgeon, and he's actually one of the few people that does do, let's anticipate the next move. Where the fuck is this market going, and let's prepare for it. He does do the stop entry for his beginner traders, so he doesn't want them to overtrade. So why would you confirmation entry? Because you don't want to blow up your account. You want to bleed it maybe, but you don't want to shear it off. Because if you put in stops and limits and market orders, like, holy shit, it gets away from you very quickly, even in a micro account. So, because I don't know if my last account that I blew up shows it, but the equity curve can be quite immense with just one case if you just keep hammering the account, and the broker allows you. Big caveat, the broker's going to let you lay that many tickets in and not freak out. Maybe you have to run it on a VPS to qualify for that many tickets, and that much to consider, but you're spreading your risk out so thin at that point. I don't think there's a lot. There shouldn't be too much if you can create the metaphor that it's trading's a business too. That's another one. So Albert Brooks, he's coming from a surgeon mindset. You've got Alexander Elder, who told me once, he told the class, I drive so fast that people think it's a test. The passengers in his car. And he can afford the ticket, apparently. So he's like, no, I'm gonna drive fast. And then the Sandra Cardwell guy, who's from down south, wow, just mellow as can be. I'm like, how can you be so relaxed? You're fucking trading commodities. I mean, he's not even trading Forex. He actually said, which I couldn't believe, that if you're going to trade Forex, you should set the RSI at 40 or 20. I'm like, what? And I think he's talking about like a zoomed out. What is he talking about? Now, the vertical dimension goes away from RSI or the index or my pip grid. As soon as so the pip grid, 20 pips, is just a gauge, so you know exactly when you press a button and it's going to lay a 40 pip grid, and you should be coming in every other 20 pip line. So I made some money on this demo account here that's JAFX, and that account did pretty well with canned double clicks that I'd written a long time ago for a nano account, and I ran it on that. So it made money without me having to hand place them, because I just sized up. It was 3 currency pairs I was trading. I just looked at the screen and I did an instant gun to your head trade. I'm looking at just like this. If I'm looking at this chart here, I just go, you know what? I got to trade for this fucking move. So all week long, I'd be selling into this rally, because to me, the counter trend trade is the easier trade. So I'd fix the scale and I'd be like, okay, man, Fix the scale. Let's drill down on this puppy because we can't trade. Not only can we not trade the left side of the chart, I don't think we will be trading these prices tonight when the market opens. So things to consider. What is possible? And so I can't trade this over here. That moves over. In fact, this thing I would just ignore. I'm only concerned about the current vacuums that exist, the possible fill zones. So right now I'm going to say here. It's all that matters, and we're coming into completely fresh highs. Probably going to snap into this on the opening tonight. We're closed, screaming into the highs. The question is, how many sell limits do we put in here? How long do they last? The monthly chart. So that was a big money maker here to sell. Probably this one, maybe. Not so much. All you got was this. You got this move here. So here's the auction within the auction. Here is the anytime you see the market pull back and crush into this, go below support here and get trapped on closing prices. So that's the big deal, right? This is the big, and this could be a 618 pullback, but why in the fuck would you? I don't get it. If you're going to break out a 618, you're going to negate this. Well, it doesn't line up with my other part of my system. Dude, this is constantly going on. If you sold every new high, could you get stopped out? Yes. But if you sell this new high and you cash out when it comes into, okay, so it's going to start filling everything on this. It's going to try to fill all the way back to here and stop and come after these bulls. Stop. So the bulls that have the trend traders, the winning trend traders, I should say the winning traders, and instead of saying retail, because retail means losers. But they can be right. They can be making money on what you consider to be, well, that's just not right what's going on there. I mean, look at the news. I mean, there's no way these prices should be the way where they're at. Well, they are. They are where they're at. And the counter trend trader is up on this thing right now. Whoever sold the top tick of that is a winning trader. And, well, did they sell 40 million there and they're up X amount of dollars? Well, that's a different story. The lazy trader, the guy that could see this is the Asian session here, and he placed buy limits here with a stop that was, say, here, conservatively speaking. But the problem is with this whole thing is I'm buying that too. I got more than one bullet. So give me a 19-shot Glock. Give me the extended pistol handle, right? If it's a war, this is what they're telling me, the war room. You're going to need bullets here. You're going to need buy limits here that never get filled. If you want to draw a trend line on there, you're kind of asking for trouble. Because so you go down a rabbit hole of which trend line. If all you cared about was buy and sell zones for certain, I'm placing sell limits all the way up here. How long do they last? I'd say it's going to last all day, which is, here's how you know. This is a 1 hour chart. There's 24 hours in a day. That never changes. So what doesn't change? Okay, so this is, let me turn on the grid. I don't know how we lost that. It's not repainting color. It doesn't paint up into fresh territory. So here is a 60 pip zone. So for the next day, right here, I got orders to sell up here. Now that may look like, wow, that's just too much exposure. Let me take it down to, I'm only going to put a 2 hour script in. And if I do 2 hour script up here to sell, so what I'm doing is I'm trying to estimate the time of arrival. Now this is going to have to be a longer script. So from the moment I drop it, and how long is it going to hang out there? This one is going to be higher, so it's going to last longer. So if you wanted to go down the rabbit hole of a trend line and say stuff like, well, this is what I expect, and we can pull back, and there's a 618 down here, and holy shit, right? But what in the end, what's going to happen? In the end, you're going to say, you know what, it's not getting any cheaper. I'm going to buy here, or I'm going to put a limit on the top here. I'm going to play tops and bottoms off of the momentary lapse of reason top. And the only give back on highs, you don't even see that in close, but what this is a triangle. How do you know? It's a wedge. How do you know? Because it's less volatility than the previous price pulse. See, this to me is a triangle. Right there. We don't have to. We don't have to go to the. We could probably see a flag or something, but that's it. Like this. This is lack of volatility, breakout trap, breakout run, low volatility, breakout trap. People are coming in here, and the guys that are riding this thing, cash out, cash out, cash out. Look, even stuck on close below that. I've omitted the open. So once you put the candles on here, your brain will come unwrapped. You're like, holy shit. Look at these fucking dojis. But see, that's a different thing. That means you really are going to have to pull the trigger at the market on a doji. And like I said, even the Urban Forex guy gets it, that the people that are trading these dojis are saying, I want to get in before the drama. Once the drama kicks in, the losing traders, supposedly, what he calls the retail people, come in and they chase it. He didn't even say the word chase, but this is what people are aiming at. Now, if I was trying to use this, and I've tried to do it, like I said, it's an anxiety attack when you break out that fucking fib for entry. No, the market's telling you, dude, this is my top, right? This is where we broke out, pulled back, fell. Keep screaming up. A bar chart's better. If you want to count these hours, the bar chart's better. Because they're, even though the open is there, it's not destroying the... plus the candles are sitting outside of that line, which is kind of making me want to draw a trend line like this. If I were to draw a trend line, I'm going to draw it off that body, which is not the true trend. So trend lines are no different than moving averages. One period moving averages are my trend lines. So I like to very tightly run because I'm overly eager to trade. So I want to force the trade. That's why I had to trade micro lots, because I'm forcing the trade. If I go to the bar chart, I'm drawing a trend line on those highs. And that 1 hour, because I know inside the 15-minute, there's a perfectly good trend line on the 15 here, right? So if I switch time frames, the 15 is going to be slightly different. But if I go to the half hour, I mean the 1 hour, see, I already figure that, okay, that is the, okay, so let's not look so far in the future. Let's just look at this. If this is the 20 pip vacuum, and this is the trend line on the 30, on the 1 hour, it's right on those highs. It's just literally that, these first two bars. You can't do that on candlesticks because if you just can't. And the line's helping me, give me that insane, like, and it's forming a vacuum on the top. And this is just a classic thing. And here is the breakout non-directional or even directional bots getting trapped. This is a low range. Here comes the triggers from the 2 hour, from the 1 hour bots say, okay, sell, continuation, tank. Nope, sorry, not so fast. And but if they're running buy stops here, they make it back here. So you get stopped out here, you make it back. The volatility is too high until this is the only place to get in. And now here comes the stacked up hedge bots are stacking up here. When the market opens, I'm sure that they'll be taking profits on the 20s. Right. So if you have sell limits on the 20s, even here, sell limit on the 20, no fill here. If you were to take a strict grid approach to this, like there's so many ways to trade this. What if you said, well, I'm going to sell on the 20, no fill here. I only got this one fill. I'm using 40 pip stops, right? So there's a stop for this, stop for that. I'm trying to make 80 pips with a 40 pip stop. I don't make it. They fill me here. I take 18 pips of heat, but I'm going to make 3 times my money. Because with a 40 pip stop, you're looking to make 80, but if you ran a 20 and a 40 stop and a 60 stop on 3 different tickets, so you're putting in stuff that won't, you're putting stuff on your showroom floor that you know won't sell, but it's shit that gets people in the store. Not that you can manipulate the market and it sees your tickets, but some people think it sees their stops. So if it sees your stop here, why don't you put a limit in to buy? If you think it's seeing the retail goober stop here, why aren't you buying this vacuum? And why aren't you selling here for that baby scalp? Or selling, you should be short right now on something. And maybe you already cashed out of something. I mean, not to say you should be, but if you're going to always be in. So this is another thing. Are you want to always be in something or just about to get filled on something? If you had the 1 hour bot, this is like a 9 pip range here. If this is a 20 pip grid, this is the smallest range for 4 hours. And you do make 40 pips. Even if you got filled here, well, you almost make 40 pips. But what do your stops look like? Are they like this or are they like this? That changes everything. And you don't have to even know what the fuck you're doing trading if you can manage that. If you're always selling above you and buying below you 8 hours from now, 80 pips deep, you're expecting the market to move at a rate of 10 pips every hour. Right, so 10 pips an hour, and what's the rate of change here? 8 hours, we move 60 pips in 8 hours. And sometimes it's like blistering fast. So the rate of change, that's what the index, the RSI is showing you, the relative strength index relative to the time print. But I'm not going to put an RSI in here because you shouldn't need to even use that. Everybody's going to be on these everybody gets in on the lack of volatility. Let's say everybody says another thing. Winning traders would trade the breakout from a small range. Losing traders would trade the breakout from a large range. Not to say that they couldn't be a winner in the end, but the high exposure trades. Okay, so you have to qualify traders to say retail, and I don't get that, because just because you're sitting in front of a platform getting zero spreads doesn't mean your decisions are going to be better. If they're paying you to trade, it doesn't mean that every trade you do is going to be glorious or every song you write is going to have some profoundness to it. The market is actually a lot. I'm trying to simplify it by cleaning it up with the 1 period moving average and just kind of saying, okay, let me zoom way in. And because this view is compared to this view is a totally different view for me. If I compress this at this depth, it's going to look really ridiculous. And you just can't even, how do you put a trade on in this situation? If you can't see what is going on structurally in the last thing that's happened. So whatever prices have been discovered, that discovery is over. So they say price discovery. In other words, the hunt's over. We know where the gold mine is next. Where's the next gold mine? We've tapped that. If they've blown through stops or liquidity, okay, that's been satisfied. So that's why they call it the beast, I suppose, because it's just smashing around, obliterating buyers and sellers, annihilating. I should have added the. It's on here, the spread, because the market's closed, so we're not getting any data. So the spread's pretty brutal here at 3. But with the 20 pips stop, all of a sudden it's not that bad. But now you're risking more in pips and real dollars. That's why if you're going to go to a 100 pip stop, you'd probably want to, if you want to keep the dollar risk the same, you're going to have to go nano account, because then you can run insane fucking tickets. I mean, you could be in like, oh yeah, I'm down 1,000 pips. You're like, really? Oh yeah, it's like a $500 position. So that's another thing. Find a nano account. There's not too many out there. You may have to find a friend somewhere and make a deal. But you know, if there's a will, there's a way, as they say. But yeah, it's so we have a perfect top bottom here on the 4-hour just before this move, and I'm sure RSI is giving you the ultimate. I described this in the RSI thing. This is 0. This is 1, 2, 3 period pullback in RSI. I guarantee you RSI is more oversold here than it is here. This is the perfect setup. And there's the classic stop hunt in the 20 pip window. Whole thing happening in 4 hours, but honestly, if I got in here, I would start selling here, getting out, and looking to go the other way already, slightly, because it just doesn't last. Looking at the market like this is scary, but this is what the market really truly is if you're running a 20 pip stop or a 80 pip stop or a 5 pip stop. That doesn't change because the volatility is so high right now on this currency pair that this move here, right? That's astounding. Auction re-engulf. We've been, so I think even ICT would understand this, ICT people. So this is considered the kill zone. Everybody should understand this shit. The ultimate kill zone was back here. These orders are bigger, right? Because of that. And I can only imagine what people are saying when they sold this rally and they are like, dude, we are so going to keep tanking. Why aren't you short? You're down how many pips now? So you get that a lot from people. If you're buying heavy here and heavy because of this, in other words, you already scalped. Don't forget, if you bought this, you've already scalped it to here. Let's hope something. And it's amazingly, if you just sold every 20 pips up, you're not going to fill on this. The market doesn't have to come back to here for this to be a bottom become a top. There's not going to. So never think that everything works all the time, because it's all structurally based, dependent on. You can't have a list. There's this guy, and I want to do the video about the guy and say, this is the guy that is the Naked Trader Peters or something. He calls it the unique area. So his unique area here, yeah, okay, dude, but, there was the scalp in the unique area. See, the sellers, who's making money? This is also the question from Naked Forex Urban Trader. Well, who's making money in that trade? Well, there could be people that are making money in that trade that just could see this unique area, and they put orders in the unique area, and they got filled, and they cashed out into this rooftop. And there's other people that are on the 4-hour chart making plenty of money coming back the other way on that. So here is a failure. This is a flag to get in because we haven't cleaned out this yet. So now everything's clean. It's a clean machine. In fact, right here, I'm telling you, I'm selling here all the way. Without using MetaTrader tools, which are kind of a bitch. You can't freehand style draw, but it's going to be like, okay, here's the length of the ticket. It's going to go way out there to sell into this. And another thing is, if you come back to here, which the Urban Forex guy did, which kind of, this is as far back as you can come. So what would be the, people will make all sorts of suppositions. Well, okay, this is the trap. We can see the scalpers come in here. They're going to pull it back to here, and then they're going to go up. It doesn't have to. It could actually dilly-dally here, come back, go like this, and just start creaming all these people and just re-cream them. Just like here. It never, once they trapped in that 20-pip window, and the scalpers, they played like a 12-hour scalp game in here, then it finally implodes and starts crushing into this void. Right, so these undercuts, and this is everything's due for a correction. There's no market that's not due on some time frame for a correction. You have the plan to run 18 pip stops to make 36 pips. Can you run those? But if you run a multitude of orders up into here, you can lay those in and walk away. And hopefully you've got some scalpers in there. And maybe you got a couple swing take profits in there. And you're going to have the, well, I'm only going to put in a 10 pip grid here that lasts for 12 hours and whatever. And then, not to mention the buy limits. So I probably started about here and run this buy limit all week, this all month, this all year. So all year long, I would look to buy here, of course. It's so silly to talk about, would you buy low and sell high when that's the only way to make money? Or actually, Turtle Way makes money too. Buy high, sell higher. But this, when you buy low, sell high, you're assuming a counter trend entry. You're going against the current crowd. So if you go to the 1 hour chart, you're like, oh well, fuck, man. I should be getting filled on my buy limits here. This is the way I would view the 1 hour chart. Is I've got buy limits in this for a very short period of time. So I wouldn't treat a 4 hour chart like I treat a 1 hour chart from the standpoint of how long these orders last. Well, coming into tonight, even though I say I'm going to sell up here, above here, I'm going to buy below here. And I don't want to get involved unless they come into my trap. So I can put a whole grid of insane orders here. I can put quite a scalp party here at this doji, and I can hand place it all, or I could press a few buttons and lay in static or even logarithmic Fibonacci grids that come in, martingale grids, whatever you can call them. Right? It's like there is no limit to that. Another thing Mark Douglas said, trading is the only endeavor, I think, even beyond playing guitar, that offers ultimate expression. So I think what triggers a lot of people is that it makes them pissed about what I'm doing is that I'm saying I'm just going to do whatever I want, and they're like, sorry, no, there's clouds to be there's 20 EMAs to worry about, son. You are just not institutional, professional quality. Great, I prefer that. I prefer to be, Jack. I prefer to be on the honeymooners, Ralph, the guy that works in the sewers. Just because I just don't find academia to be solving the problem of fear. They're just making you more scared. I mean, it's making you more checklist orientated. Checklist should be, I'm alive. I've got a mouse in my hand. Now let's fucking make some money. I can't have a checklist. I guess, well, okay, for the car, where's the fucking keys? That's my checklist. Well, we're low on fuel. Let's put some fuel in. Next question. Like, that's a problem. I guess if you're going to be very meticulous about the trading, okay. But if you donate the meticulousness to writing the script, make sure it compiles, make sure you're on the right currency pair, make sure there's money in the account. Is there gas in the car? Right? Then I think you're good to go. There's a guy that I just watched and I laughed my ass off. He's a scalper and his name's called Jay Take Profit. He's like a young rapper trader. And I'm like, this is hilarious. This guy's making money. Bollinger Bands on his phone. It's beautiful. He goes, when these wicks start popping, I goes, I'm out. When I see wicks, I'm out. So he gets it. And it's so simple. Trading is so dumb. You could be like, you could buy some piece of shit band in a box and write hit songs all day long. It's just like, who's going to hear that shit? Where are you going to publish it? I say give it away. Give it away, and the people that are trying to milk. I saw the Aerosmith guy crying about, well, I'm still trying to get money from, dude. Really? Yeah, that trade I was in, like, dude, you're out of that. Let's move on. People are just hilarious, man. It's like the guy that wanted to patent the smiley face. There was a guy that wanted to patent have a nice day. You can't just say that. I mean, where do you draw the line on that shit? I could care less. I mean, you could take all my shit and fucking sell it for all I care. Good luck. I just don't care, man. I wouldn't want to manage all that shit. The first guy that says, well, this isn't loading, I'm like, bye-bye. You couldn't pay me enough to manage it. And I guess that's the skill set of the Greystones and all these mentors. They're not ugly people. They're not inappropriate. I'm everything. I'm ugly and inappropriate, so I don't think I'll be able to go for the and somebody asks, well, why don't these guys just fucking trade their own account? Because it's too much stress. It's better to show fucking goober setups on a goddamn like this. I could be like, okay, well, here's the thing. What we're gonna do is we're gonna put a buy limit here. We're gonna just put our typical grid in. Okay, we're done. Course is over. Next question. And then the question would be, well, what do I do about the 5-minute chart and my wife's nagging me? Okay, well, do you have a way to get her some, like, can you Mickey her drink? Can you just take her out? Don't you have a hitman? All that stuff. And of course, when I started doing it, it was brutal. I felt like trading was like, I thought it was into human trafficking. The way people when I tell people I was a trader, they was like, dude, like, what are you, like a pimp? I mean, I've just never been more shy about even talking about it. And they would, you're gonna be a broker when you grow up? That's what people would say. I'm gonna trade markets. Like a Payne Weber guy. Like, you mean like those, you want to wear a coat and tie and shit? Like, people, I can imagine some guy down south on a farm. And you walk up there with a tablet. Of course, I'm talking about now. Be like, hey, you know what? I see you lost your finger in that combine thing. How would you feel about trading Forex with your remaining fingers? Just press this tablet button here, and they're like, oh, because you had to water it down. No fancy colors. I go with a grayscale tablet. But I don't know. I don't think it's for everybody because there's no tangible. At least if you're losing your fingers on the field, you can say, look I'm a real man. Look I'm taking down corn stalks. Trading's like gay. You're just you're just going to press a button and wear a suit. Isn't that weird? I mean, in like the Wall Street, but really, I got getting tendonitis here on my click button. Actually, I had that. I was trading like this is back in the day when I was so giddy, and I had one clicks running, and I started to get tendonitis, and I thought maybe I'm over trading, getting tendonitis on my mouse clicking finger. Yeah, so it's going to be fun. But every moment's unique and every next moment's unique. And so I definitely trade this from both directions on limits. So I got my limits here coming into tonight. Buy limits down here, sell limits up there. The more work, the less risk. So if I'm pressing a button for 15-minute limits, I got to keep hitting that button. Here's the half hours. Here's some weekly limits. Got big banks down here. I could go from currency to currency pair. I could lay all that shit in in 1 hour on a Sunday night and see how the whole week does. So I could do a demonstration of that with a demo account like this Mad Forex guy's running demo. But he understands. He's unconventional is conventional to a person that knows how to get the fuck out with money. Like you can say, let your profits run. Okay, that's wonderful for a guy that can put a fucking 300 pip stop on the guppy and wait 3 months to make 1,200 pips. And he can brag about 1,200 pips. Look at that fucking trade. Well, you stuck in there, trooper. Okay, well, not everybody can stand with their face to the nose to the wall for punishment. It's like, okay, you think you could trade, make 1,200 pips in 3 months? Yeah, well, maybe. You catch some fucking breakout of a 200 pip breakout on the weekly, and the thing just runs like, oh yeah, this thing's gonna keep it. Just look at that and like treat it like an investment. Or are you sitting there white knuckling the 15-minute chart? So there's two different worlds. A 15-minute chart here, this is gonna look like fucking hell. You're like, well, Jesus Christ, this is way too much work. It's noisy. Look at all this fucking bullshit. I can see the spread. This is brutal. Look at this fucking 20 pip spike on the 15. What the fuck is that? And once you know it, somebody's probably got a sell limit here and they just got filled and they just took their 20 pips and ran. So it shouldn't be a surprise what's going on here. Look at this little mini vac. You want to trade that? Yeah, okay. You can see here's the same fractal, the same trading idea, but on the 5-minute, yeah, you're going to have to zoom out. This is the beginning of the day. But here's where your buy limits are. Did you get filled? Oh, maybe not, right? Because this is a 1.5 pip. Sorry, this is a 2 pip window. Okay, there is a 2 and a. I'm going to say give myself a 5 pip window for fill. If my buy limit is on the top of that box, I got buy limit, buy limit, buy limit, buy limit, buy limit, buy limit, buy limit. I'm willing to buy all the way to this. And I'm on the 5-minute chart, and I'm like, holy shit, they filled me, those motherfuckers. Of course, they came back and retested this. They did not take it to here, though. If your buy limit's pending on the 20-yard line, no fill for you. I guarantee it. I'm going to estimate a 5 pip spread. Here, you got filled. If your buy limits are pending underneath this vacuum on the 5-minute fractal, okay, I think it's okay to zoom out, but see, I don't have candles running. Fuck, wait. Am I? Oh, I'm too zoomed out to see the candles. Let's see, I fucked up the chart. Wait, please hold. Okay, so you can't, the candles just turn into mush. In other words, you can't, because I'm on top of the, but you can see how the candles would just be a fucking mess. Like here, it's just going to be all noisy looking. But see, I took out the noise by running closing prices there. And I could probably thin that out just one hair. I'm just so overly angry. So here, let's take it down to here. So it's a little bit more sharper. And the candles are beneath that, and here's the bars beneath. There's a pure line chart. So as they dip into these windows, and here you finally get filled on this ticket. Let's see the auction. We come up here. We trap here. We get a double top. There's divergence in RSI there. We'll just assume higher swing. Who's the better trader? The ballsier guy is putting a sell limit here. The winninger, lower risk guy is putting a sell limit on these new highs. So which new highs? People are saying, well, I'm putting my sell limits every... Okay, but how big is that ticket? What is your expectation in the bigger picture? How wide is the stop on each one of these? If it's 80 pips stop, you're still in that fucking trade. You're down 40 pips now. Did you cash out? In other words, if you sold this price here and you did not get out into this vacuum, you had another chance to sell more again and even make money in a faster amount of time. So how long did it take you to make money on this selling new highs on the 5? Selling new highs, not a lot of money. Selling new highs, fine a little bit. Selling new highs, very quick and dirty. Buying new lows, very quick and dirty. But quicker and dirtier here. And the dirtiness is equal here. Right? About the same rate from buying this trap into this trap, from trap to trap. Here, no, fills. You had to buy this mini vac. Had to buy that mini vac for only this. Now, here's the pressure's built up. It looks like we're going up again. On the 5, which is counter the other time frames. It's completely against the other time frame. So these 5-minute guys, they're long here. They're looking to cash out here, 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 and the sellers come in here. If here a 15-minute script's going to look like reasonable and unfillable, really. But you would think this was an impossible trade. And here the spreads maybe got wide. They went to 10 pips. We can't tell. And this is what people say, well, the Ryan Browns of the world that built a robot to take advantage of these entries, they're going to get clobbered on the spread expanding here and also the slippage on the fill. And they're chasing it. And is it putting buy stops in front, or is it buying in limits, trolling? If a bot's bullish here, it's better to have a trolling limit bot than it is to have a stop bot on the 5-minute, because it's going to pick up these little pullbacks. Whereas if it's buying on these tops, it's getting trapped and it's getting in late. This is definitely the better price. Or are you holding from here? Look at this amazing retest come back into this hole. And these are like 1 hour holes. This isn't the 5-minute chart. Now the 15 is a completely different trade for me too, at least in my frequency. And we have to say higher quality trades, just less of them. Here you can see the 15-minute structures. You can see the perfect swing high, pull back into this structure, and this is very fast, and you got to be very quick on this chart. But here you can see your fill, time to get out, and your buy stop. Your breakout bots are only trading these here on the 15 here. But see, your spread is your enemy. So is it worth for you to get filled on a spread there? Better that you have limits in these large structure vacuums and you're trading at the market. Like you're down, close below, you closed unfair, buy. Also, you're filled on some limits, hopefully. The 15-minute chart. So each time frame has its own kind of tactics. Half hour, a lot less busy work. Higher quality setups if you babysat this top, become a bottom, breakout, come back to the breakout point, perfect triangle, clean break, starts crushing up into here. Your sell limit grid starts to fill here. 20 pip take profit, 40, 60 pip take profit. Now buy limits here. So go to the 1 hour chart. And we have different trades here. Now, I guess you call them very high quality trades, which just means less trading. Great breakout there. Here is that triangle from the half hour. You could call this an ascending triangle. I used to think that mattered. Like, I would think, oh yeah, well that's an ascending triangle. We don't use that in uptrends, dude. There is no fucking rule. For me, when the volatility dries up, whether it's a flag, a fag, a fucking wedge, a fucking pennant, if it's a fucking, it doesn't matter. If the market's not doing shit and it's going like, people go, well, it's not going anywhere. Okay, that's just a quiet market, low volatility. to try to bracket it and say, well, this is a if you trade flags in a bull trend statistically, dude, there's no such thing as forward statistics. Talk about the ultimate bullshit. I'll look back. They go, well, hindsight's 2020. What do you think all your data is? What do you think all your statistics are on if this pattern works? You'd have to have a trade plan for the fill, the auction, the backfill, the overfill, the overbought, the oversold on time, and you have to have a trade plan for the like a giant move. I'm in a giant move. I'm in swing trading counter. The market's telling me, okay, man, time to, and it's also time to run the market just moved 82 pips in an hour. If it only moves 20 pips in the next hour, I'm going to just bracket that. And I'm either going to trade in the same direction or I can counter trend trade it. But I know that tactically it's time to run tighter stops when the market's quiet. When the market's loud, go for wider stops. And if that you don't have wider stops available, then you'll stay away from giant moves and you'll only get in during quiet moves. And maybe you're a reversal trader or a trend continuation trader. Both those people are making money if they're waiting for the market to simmer down. But the word waiting is involved in that, and that may be a problem. So if that's a problem, you go to the 1 minute chart or the tick chart, or you have your finger on the trigger, or you just have pendings really close. And instead of being the guy that gets on a buy stop entry for trend continuation, you have a sell limit there to take 8 pips with a 4 pip stop, which you only clear 6 because of the spread. So you could have that running, and you could be very good at that and know how to, if you're playing guitar, you know how to do a hammer on and save a pick stroke. And you could just do the whole thing, with your left hand, really, if you could play a hammer-ons and pull-offs. You don't have to strum the guitar. You play with your feet, So, that's that. I don't know if that helps, but there you go. That was not a short video, but oh well. You can't always predict how long it'll take for me to run out of spit, so to speak. So as they say, good day.